Okay, and we are live. Can everyone hear me? Okay. Okay. So let's get started. So, what we are going to discuss today, and what we're going to go over, is something that I've been testing using the DaVinci, the DaVinci Code strategy system. All right. Um, Now, one thing I want to highlight with how I've been testing it straight away, all I've been looking for is a certain window of time in the day. So, for example, I've put on here a market sessions indicator starting at 7 a.m. UK time and finishing at 4 p.m. UK time. So, obviously, that segment of the day is where I'd say the majority of liquidity is going to be pushed into the market. Okay. Um, Obviously, you've got UK session in there, London session, and New York session. Okay. So, I've got a few months' data. I am going to continue gathering data on this, just to highlight to you guys what's possible with this, and I'll share my thesis going forward. Okay, um, so straight away, okay, what we need to be looking for on this particular thesis on this system is we want to see obviously that green um, bar there, and we also want to see a bar above that line, or vice versa if we're setting below that line there. Okay, so for instance, let's just go through it slowly. The way I've been testing is obviously we're on the 15-minute time frame at the moment. All I've been doing and all I've been marking on is I've obviously been imagining that we're in real time. Um, so if that was to close, we see the green bar there, we see it's closed above there, and that would be the entry. Okay, 1 to 1. Okay, is what we're going for, what I've been testing, which seems to be working quite well. Before I actually continue on with the candles, let's actually have a look at the data itself, what I've gathered. Excuse me. So we have last month, okay, February was a plus 7R. So if you're risking 1%, 7% month. If you're risking 2%, that's a 14% month. Okay. Same with January, 7R as well. You can see we had 16 wins in both, actually. We had 4 break evens. So how we would manage the trade with this, or how I've been testing it. Again, I'm not trading live on this just for the moment because, as a lot of you know, I'm just joining the company fresh. I've just been introduced to this system. The way I like to gather data is very in depth before I just jump onto a live account with it. So how I've been doing this is, so when we go to half R, okay, so in other words, when we go to positive half of what we've risked, we're going to put the stop loss at break even. Okay, so we had 4 break evens in February, 12 in January. Obviously, we had these as well. Let's just discuss this for a moment. And then we had 9 losses in Feb and 9 losses in January as well. Okay, so what we have here, obviously, I've got the win rate there. So we've got 65% win rate for Feb and January. Very good, to be honest. And what this is here, what I've highlighted there is, so obviously 4 wins and 2 losses. What that means is there was 4 wins in a row and 2 losses in a row, maximum, like within that, within that month. Now, why I like to do that is for expectation. Okay, so if we all of a sudden, let's say for example in December, you can see there was 4 losses in a row consecutively in December. So if I've got that information in front of me for each and every month, and they're more or less the same, and we do run into a 2 losing streak or a 3 losing streak or a 4 losing streak, we know that's part of the plan, and we know that that's part of trading, and we know that that's part of this system, because when we zoom out, when we look at the bigger picture, obviously it is profitable. I've got 1, 2, 3, 4, 5 months so far. Again, like I said, I'm going to continue gathering more data with how I'm looking at this specifically. So let's continue. So those are the results. Obviously, -2R for December for this specific way that I'm looking at it. That's not to say that the DaVinci doesn't work in December at all. This is just on this specific pair, on the pound yen, on the 15-minute time frame. This is just one very niche way of looking at it. Okay, I need to make that very, very clear. November plus 5R, October plus 2R. Again, you can see all of the results there. So let's go through it. Okay. So yeah, so this was a buy. So what I'm doing is, or what I've been testing is that would be the entry on the closure of that 15-minute candle, 1-to-1 target. Okay. Following on in the day, following these, okay, we're basically looking for a highlighted bar in this area. Okay. And what we would need to see is is these as well down here. Okay, it's these as well. So this bar here, this 15-minute bearish candle closure, if we have a look, what do we see? Well, that closes obviously below that line. We wouldn't have gone the one before, although it's highlighted. If we zoom in to this, we want to get right into the details. Look at that, it didn't close above. Okay, I'm talking about this bullish one. So that wouldn't have been a buy, okay, because that didn't close above. However, the next candle, as we just spoke about, was a sell. Okay, was a sell. Firstly, we have the highlighted bar there, and of course, that closed way below that red line. So there's the sell. That would have been the entry, and we're going just above the last miniature swing high, or sort of the most recent high or low that's been created. That's where the stop loss is going above with 1 pip extra. Okay. This was a break even. The reason why is because we came to a 0.64 in profit. So obviously at 0.5R, we're going break even. So that would have obviously come back to entry and gone to TP. Again, this is just something I'm testing, just for money management more than anything and trade management. Because we want to minimize our risk at all times, of course. Obviously with that high win rate, it doesn't necessarily matter if we have a few break evens a month. And I've seen as well, although that one did work out, it went break even and then went into profit. I've seen more often than the other way, more often than that way, it will go break even and then go the other way, potentially stop you out. So you're actually doing yourself a massive service by doing that, with this system, I found. So Tuesday, this was another trade, right? Let's talk about this. Let's talk about why this wasn't a trade for the way I'm looking at it personally, or the way I've been testing. Is obviously that's a green bar, right? But if we look at the actual candle, okay, it's a bearish candle, so that doesn't align with what we need to look for. This is the next trade. We can see a highlighted bar there. If we align that down here, look at that bar there, close below the red line. Okay. Where's the stop go? Just above that last swing high with 1 pip extra, 1-to-1 target, TP hit. Okay, and these icons, these hearts, by the way, is just something I've done, just so when you zoom out, you can quickly see. Okay, there was losses there, there's wins there, there's break evens there. Okay, that's all that's for, just to make it easier for myself, to be honest. And if you wanted to do the same, I recommend doing that. So the day before, we've got the 4th of March now. So you've got 2 wins on the 4th of March. Very, very nice. Okay. So yeah, just to mention, I've been testing 2 trades a day maximum. Again, if you want to put your own chart time in and test whatever you want, you can maybe do 1 trade a day maximum. It's whatever works best for you and your schedule, I would say. Because you don't necessarily want to be staring in front of the screens all day. So what you could do is, and actually something that I'm going to be doing going forward, is maybe just testing 2 hours in the morning for UK time. So maybe 7 a.m. to 9 a.m. Is there a setup there? Get that data. If not, maybe add an hour on, 7 a.m. to 10 a.m. Is there a trade within those 3 hours? And then just gather that data, because that way you could potentially have 1 trade a day. So, there's not a lot of stress involved at all if you're doing it like that. And that's the main thing, isn't it? We want to relieve that stress with trading, okay? We want to relieve that stress. So, and when we have a system that is proven, that we've seen the data and we've seen it work, that's what can alleviate a lot of that stress. And as well, risk management, okay? Risk management. As long as we're risking what we can afford to lose, or what our account can afford to lose, there shouldn't be any stress or, major emotions involved. If there are, then potentially you might be risking a bit too much. Okay, so let's talk about this trade. So, well, we have a green bar there, but if we look down to that blue column, it didn't close above. Okay, the next candle, the bearish candle, we have another highlighted one there, aligning that down. It closed below the red line. That's the entry. Closure on that is the entry. Stop above the high. Again, that's the last swing high or last miniature high. Okay, excuse me, 1 pip above, 1 to 1. There's the win for the day. Okay, because I've allowed myself 2 trades a day for this specific plan that I'm looking at potentially integrating. There was another trade here. Okay, so just before there was obviously this red highlighted bar. If we look down, if we align that with our crosshair, you see it didn't close below the red line. So we go forward. We wait for another potential highlighted bar, which the 15-minute candle after gave us that, which is there. Align it down. You can see that the blue bar at the bottom closed above the green line. Here, enter on the closure. Stop below the last miniature swing. 1 pip below. 1 to 1 done. Okay, 1 to 1 done. Another win. Okay. Very, very simple. Very, very simple. And that's why I've this is why this has intrigued me, I'll be honest, because it is very simple, and anything simplistic to do with the markets and effective, that is effective, that brings in results, I'm there. I want to know how it works. I want to see if I can make money with it. Yeah, I would recommend you guys do the same as well. Simplistic is definitely the way forward, I would say. So yeah, Friday the 1st of March here. Okay, another trade, another win. That was the only trade for the day. Actually, no, there was a loss there. Okay, my mistake, and I'll go through that as well. Let's go through this one. Okay, so this one here, right, closes below that. Actually, let's look into that. I don't think it did, actually. No, it didn't. So again, this is why we need to look at the details of this. Okay, the details. Look at that. It didn't close below, so that's actually not a trade. And the one after wasn't a highlight. So that would have been the entry on that one there, which would have been a loss, because that would have been the trade like there. Okay. So below that swing low, we've got 27.3, round it up 1 pip, add 1 pip, which is 29. So I'm just going to say that slowly. Round it up to the nearest pip, and then add another pip. This is what I've been testing. Oh, no, that was a win, actually. Very nice. So that was the win for the day. Why is that not clicking? There you go. Yeah, that was the win for the day. Okay. Again, why is that? Again, look, the blue bar at the bottom closing above that green line. We've got the highlighted bar. I know that's the entry there, isn't it? Sorry. Yeah, that would have been a break even by the looks of it. Let me just confirm that. So again, 36.9. We want to round it to the nearest pip. Obviously 37. Add 1. 38. Okay. Let's just say there. And yeah, it did go to 0.5. So that would have been a break even trade for that day. A break even trade. Okay. And we actually have another trade there. I'm just looking at that now. So you see that? So I'm looking at these. We have a highlighted bar there. Looking at the bottom, it closed below the red line. It's also a bearish candle. So that would have been the trade, or a trade there, which would have been a winner, to be honest with you. Above the nearest swing high, miniature swing high, we've got 18.1 pips. We're going to round it to 19, add 1, so 20. Then obviously that'll reach the 1 to 1, or 2.48. So that was our 1 to 1 for the day done. Very nice. Okay, and obviously you can see how I made a mistake on the first time. This is why it's important to really go through the details, really go through the system methodically and diligently, because you might have, like I just did, potentially done something slightly wrong. It's gonna mess up the results. It's gonna mess up the results. So, we need to be going through these very carefully and precisely, because we can't just say, oh, we would have got in there, and in the live market, oh, it looks like it's going up, we're going to buy. it looks like it's going down, sell, sell, sell. That's not how it works. We all know that. We need rules. We need specific things that we look for, and we can't deviate away from those rules or plans that we have, because that's not what trading is about. It's about being systematic, being methodical, mechanical, and being consistent as well. So that's those. So this is obviously last month. So 29th of Feb, we've got 2 wins on the 29th of Feb. Okay, there's the first trade there. So obviously looking at the crosshair down, you can see first of all, we've got the green bar here coming down, aligning it. We've closed above that green line. We've got a bullish candle there. So that is the entry on the closure of that. Stop below the low, add 1 pip, 1-to-1 done. Okay. The next trade, the only other bar that's highlighted is this one. Again, aligning that down. Look at the blue bar at the bottom, closing below the red line. It's also a bearish candle itself. That's the entry. Stop above the high. 1-to-1 done. Okay, so 2 hour in one day. Okay, good day there. 2 winners. So here we've got a loss and a break even. So let's look into that one. Okay, so we've got a highlighted bar there. Again, obviously this variation is just what I'm looking at and what I've just been testing. It's not to say do this, do that, do this. This is just what I've been looking at. Because from there, it's kind of like you build onto it. Okay, that potentially didn't work. Let's look at that way of doing it. And, by doing that step by step by step, the idea is you could end up having a very, very solid, tight, successful trading plan. Obviously, that's the main aim of it. Obviously, we want to profit from it. So that would have been the entry on there. So aligning that up. Okay, the crosshair looking down. Obviously, look at that blue bar right at the bottom. Very much so closed above. We've got a green highlighted bar just above there. That would have been the entry. Okay, a loss on that. Okay, similar one there. We've got a small highlighted bar there. Looking at the blue bar at the bottom, closed below the red line. It's a bearish candle. That would have been the entry. So that would have been a break even because it went to 0.71R. Obviously, our break even point is half what we've risked. Okay, 0.5R in the positive. So by that point, we would have been break even. Obviously, it came. And that would have been a loss anyway. So you can see, it does pay to do that. It does pay to do that. Previous day, another win. Very nice. That was the only win or trade of the day. Again, very simplistic way of looking at it. So we just wait for a highlighted bar. Look at the bottom. Has it closed below? Yes, it has. There's a bearish candle. Stop above the high. Plus 1 pip. Away we go. 1-to-1 done. Okay. Very, very simple. Okay, very, very simple. Let's continue on. There's a loss here. Okay. This was obviously a buy. First highlighted bar was this red. But if we look at the bottom, there's no bar that's closing below the red line. If we look down the crosshair directly, there's no bar that's closing below that. So we move on. We wait for another one. This one was created. Okay. Closed above. That would have been the buy. Closure on there. Stop below that low. Okay. We take a loss. Okay. We take a loss. The nice thing about this is as well, because we do have a higher win rate or, a fairly decent win rate, depending on your risk tolerance, you could potentially up the risk, but even still 1% risk is still very good. 7% in a month is still amazing. The 7% after that, amazing. December, typically on any system, to be honest with you, depending, of course, on many variations. A lot of traders will say that December is quite a slow month anyway, due to liquidity not being in the market and stuff like that. It's the holidays for most people. So I mean, yeah, like I say, I've got to gather more data. I just thought I'd share that with you guys and girls, of course. I hope you enjoyed it. Go through this, or maybe put your own variants on it. Like, you could do anything. You could maybe go to the 30-minute time frame, and this is why I've got this here. I've called this one DaVinci tests. Okay, again, just for myself, just for a mental note. Okay, what seems to be working best? Again, I've only just been introduced to this system. Again, look, you can see there what I was talking about earlier. I'm now looking at 8 a.m. to 10 a.m. You could even do 30-minute, 5-minute, 1 hour. Okay, any time frame, to be honest with you. But obviously, the higher you go, the less trades you're going to take. So yeah, I mean, that's about it. Obviously, again, you can put it on any currency pair I've found so far. Again, do your own research, do your own back testing. But it does produce results, as we've seen, as we've just gone through. And that was just a snippet. That was just a couple of months. As you can see, I've only got, 5 months, you know. If I can get the whole of 2023 done, the whole of 2022, the whole of 2021, etc., and it's consistent, then there's no reason I wouldn't go live on this. There's no reason for me personally. But yeah, that's just my way of looking at things, my take on this specific strategy. Very, very good, very, very effective. Again, put the work in. You've got to obviously look for when a trade appears. But yeah, hope you guys enjoyed that one. Thank you for watching, and I will see you in the next one. Thank you. Take care.